So if you follow investing and Tesla closely, then you're well aware of its stock performance over the last few months. But if you follow investing and Tesla closely, then you're probably also well aware that stock performance means jack shit when it comes to the actual prospects of a company. Mostly because stock price is influenced by people, and people buy and dump stocks all the time for a million different reasons. With that said, there are some very real, fundamental reasons that Tesla stock is not doing so great right now. But there is also a major pivot that I foresee Tesla doing in the next few years that will radically change how Tesla makes money forever. So I want to give you my opinion, the opinion of someone with a degree in finance on the major challenges that Tesla faces, as well as the massive pivot that will probably save the company. So let's get started. These are the major headwinds for Tesla's future. In the long term and in the short term, there is more competition, and there is more good competition. Just a few years ago, if you wanted a relatively upscale, and we're not going to talk about build quality issues, at least not in this video, but if you wanted a relatively upscale, fast electric vehicle, there wasn't really many choices. There was like the Nissan Leaf and maybe a couple others. And then there was Tesla. But nowadays, just off the top of my head, there's Fisker, Rivian, Hyundai's Ioniq 5 and 6. Honda just released its first model, the Prologue, partnered with Chevy and its twin, the Chevy Blazer EV, the Mustang Mach-E, the BMW i4, the Audi e-tron, the Mercedes EQS, and the list goes on and on and on. Now, the major argument for Tesla, even today, even competing against those other major brands, is that there is only one company that has access to the bar none best charging network in the country. And that's Tesla. Although even that is changing. And that foreshadows, in my opinion, Tesla's pivot, which we will talk about here in a second. The point is, right now, there are more electric vehicle choices than ever. And that has undoubtedly helped lead to Tesla's most recent delivery numbers. And what are those, you might ask? Well, it's declined 8.5% year over year. Tesla delivered 433,000 vehicles this quarter last year. That's down to 386,000 vehicles this quarter, which is way worse than Wall Street's expectations of above 450,000 deliveries, and it's even worse than the most conservative figures. And whether Elon Musk will admit it or not, those numbers has undoubtedly led to today's announcement, which was that Tesla would be laying off 10% of its workforce. That translates to a bare minimum of 14,000 workers. And the stock market did not like this. As of the time of this filming, Tesla stock is down about 5% on the day. Now, there's another major headwind in the short term that's playing a part in this storm for Tesla, and that is shrinking EV demand across the board. Basically, people who want an electric car already got one, and it's getting harder and harder to convince more and more people to switch to electric vehicles. Now, this isn't just a problem for Tesla, although it is worse for Tesla. Let me explain. All EV makers are seeing less demand, and this has really led to some crazy deals on electric vehicles. For example, Hyundai had a ridiculous deal last month on its Ioniq 6 SE. People were getting those for like $250, $260 a month, zero due at signing. And when you take into account gas savings, that's basically like a free vehicle. Here's the thing though, Hyundai, Toyota, Ford, etc., they all make gasoline vehicles as well. So when the electric vehicle market sees a decline, a branch of those companies see a decline. Whereas for Tesla, electric vehicles are the business. So when the electric vehicle sector sees a decline, the entirety of Tesla's business also sees a decline. So what does this mean for Tesla and for its stock? Before I can answer that, there is one more headwind that I think we need to talk about, and that is future competition. You see, Tesla got into the EV game miles ahead of its competition, and as such has been able to grow with very little competition. But that is already changing, as we've highlighted, and it's set to continue to grow. Almost every major brand will have an electric vehicle here in the next couple of years, and some major brands are going 100% electric by 2030. That means Tesla has already and will see more and more competition from every single major legacy entrenched automobile manufacturer. And precisely because of that, I see a pivot in Tesla's future. And I believe that plan is already in motion. Tesla recently announced that it would be opening up its massive supercharging network to pretty much every single brand. And a lot of brands have already said that they're going to make the switch to Tesla's charging port, which is now known as the NACS, or the North American Charging Standard. And this is very similar to something Apple refused to do, which is open iMessages to non-Apple users. Why? Well, because in America, iMessages is one of the major reasons people choose iPhones over the competition. So if it opened up iMessage in the form of, say, an app to Android users, it would absolutely lead to a decrease in iPhone sales. But what if Apple monetized it, say $10 a month for the iMessages app? Well, then it becomes a question. Will subscription revenue make Apple more money than the loss in profit from a decrease in iPhone sales? That is the question Tesla is facing, in my humble opinion, when it comes to the supercharging network. Now, for Apple, the answer might not be as clear, or it might be a simple no, that subscription revenue will not counter the loss in iPhone sales. But for Tesla, who is already experiencing sales losses to other electric vehicle brands, the answer might be yes. And this is the exact pivot I see happening. I see Tesla in the next decade or so dominating the charging infrastructure. I also could see this opening up of the supercharging network boost electric vehicles across the board over the next few years as more and more people know that they will have access to the bar none best charging network in America. The only charging network that comes remotely close to the availability of gas stations. It's not, but it's the only one that comes close. And if Tesla can, and they will, monetize this, I could see this arm of their business becoming a large part of their revenue. And profit margin-wise, I could see this outpacing vehicle sales by a huge margin. This is the thing about Tesla. Just like Apple, they are a software company that happens to sell hardware, not the other way around. They have an excellent charging network and accompanying software. And they also have the industry-leading self-driving technology, which I could also see them at some point licensing to other brands. So when I say that Tesla is fucked, what I mean is that, in my opinion, their vehicle sales model will continue to see declines as it faces more and more competition. But Tesla as a company will be around for many years to come. And in those coming years, I expect some sort of a pivot.